You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is Friday. It is 1 p.m. Central, 2 p.m. Eastern. It is time, once again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program right now. First off, if you're just listening to Vol Views, make sure you head on over, upgrade to the full kit and caboodle. I know most of you have, but if you haven't, what are you waiting for? There's about a dozen shows there. If you can sink your teeth into something hitting you every day, usually multiple shows per day out there. We'll keep you busy. We'll keep you engaged. We'll keep you informed out there with options content. If you like what you hear, make sure you leave a review on your platform of choice so other folks can continue to discover this fine network. Folks have been flocking en masse over the last few months. We want to continue that as folks. This is a time when people need a little bit of informed content in their lives. So keep those reviews coming. Keep those questions coming as well. We do love to hear from you guys. And let's see who we're going to hear from on the show today. First off, joining me once again, holding down the MIAX hot seat. It's been a little while since he's been on the program. Our old friend, Mr. Shelly Brown, the Executive Vice President over there at MIAX. Shelly, welcome back to Volatility Views, sir. It has been too long.
Hey, Mark, thanks for having me back. I appreciate it.
Well, we had to clear some things around in our schedule, but we made it happen. Just for you, Shelly.
Yeah,
for you.
I'm sorry I missed your 400th show a few weeks ago. I was traveling up in the great North Woods doing some fishing.
Oh, you're a smart man then. Get the heck out of Dodge. I envy you here as I haven't had a chance to really do the escape from civilization trade yet, but I'm looking into it maybe in the near future. Take a little bit of a break from the madness that is the maelstrom of downtown Chicago out there. And also joining us from the hinterlands of Chicago, a.k.a. Riverside. I do believe that's where he's beaming in from. Maybe from parts unknown. We'll find out. He is the greasiest of meatballs, Mr. Mark SEBASTIAN from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program to you as well.
Yeah, it's great. I'm coming to you from Illinois Route 83, currently looking at the water sign from Elmhurst, Illinois, which is one of the great, wonderful suburbs of Chicago, because there is a person currently walking around my house deciding whether they want to buy it or not.
Good times. Then you get to hop on a truck and schlep on down to the 120-degree temperatures of Austin, Texas. So enjoy all of that there, sir. And also joining us, I do believe, from the hinterlands of Chicago, somewhere out in the burbs, our old friend Mr. Russell Rhoads, now holding down his hat over there at EQ Derivatives. Mr. Rhoads, welcome back to Volatility Views to you as well, sir.
I am absolutely thrilled to be here. In fact, I'm within a stone's throw of Route 83, but a little bit south of where Mark is. Mark, if you could run through Portillo's for me, that would be freaking awesome.
Would you send some my way in Jersey, please?
You know what's funny is I literally just had drive-through Portillo's. We're leaving the parking lot from the Portillo's right now in Elmhurst. And I literally was there eating Portillo's. My kids are sharing a milkshake as we speak.
Those cake shakes.
That is so funny.
Get it while you can.
Russell knows exactly where I am.
So I love Elmhurst. It's awesome.
If you don't know Portillo's, listeners, it's a Chicago institution. I think it has spread out a bit. I think there are a few in California now as well, but it's mostly Chicago. Hot dogs and a uniquely Chicago creation known as Italian beef, which if you don't know what that is, look it up.
The Chicago Italian beef kicks butt at any Philly cheesesteak. Trust me.
I concur.
It's going to be fighting words for our fans in Philly as we head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, welcome to the Vol Review. I like this, Shelly. I can see you now, so I know when you want to jump in, you can just wave to me, and I could just toss it over for you. But of course, this is the Vol Review, the portion of the show where we break down what the heck is going on in yet another. Again, I said it before, I'll say it again. Kind of rinse and repeat out there, but it's another unprecedented week out there in the volatility space. Coming into today's show, we're seeing the concerns over the coronavirus starting to weigh on the market a little bit for a couple of weeks now, for many, many weeks now. We've been saying, what's it going to take to really derail this bull? What can stop it? And lo and behold, it is these concerns over the coronavirus, at least in the near term, has given it a bit of a pause, a bit of a breather. We were kind of mixed the other day, selling off earlier this week, and now coming into today's show, most of the major indices firmly in the red. We've got the Dow leading the charts to the downside, off about 2 1/3%. The S&P and NASDAQ both hovering around a 1 3/4, a little bit north of that for the S&P. Of course, all that red on the screen means our old friend VIX Cash is kind of actually, ironically, as of the start of the show, was pretty close to up about 1.5 points. Actually, giving some of that back now. It was about 35 even as of a little bit ago. Now it's about 34 and about 1/4 to about 1/2. It's fluctuated around there. So up about a point or so from last show. And Spikes was at about 34.5, so that puts it up about 1 1/4 points. It's given some of that back now down to about 34, so that puts it up about 3/4 of a point out there. And our old friend VVIX, a.k.a. the Vol of Vol, is still frothy, still elevated at about a 131.5 out there. That puts it down about 5.5 points from last show. But if you don't like any of those numbers, hey, just wait 5 minutes. I guarantee you they'll be different. So it's one of those fun elements of the volatility space. It's like the weather. If you don't like it, just wait a few minutes and at the very least, you get something different. Maybe not like it any better, but at the very least, it's something different. Let's go back around the horn the way we came. Let's start in the land of the man who loves Portillo's. I guess that's everybody here. So let's start instead with Mr. Shelly Brown. Shelly, a lot's been popping off with you guys over there at MIAX. We had Henry on not too long ago from Trade Alert. He was talking about size iron condors going up over there. We had Tom on recently talking about the latest of what's going on with Spikes futures. So catch us up. What's going on in Spikes land and what's been on your radar? Obviously, a lot of vol is happening out there. What's been on your radar from a market's perspective since the last time we chatted, sir?
Well, obviously, markets have been busy with the volatility. We're very pleased with the performance of the MIAX exchanges. Our market share has been hovering around 13%. Very pleased. There's been no spikes volume of late. The market makers have backed off, waiting for the future. We're waiting as well. We're trying to work with the agencies and the MGX exchange. We're hoping that future is back soon. I would have thought it would have been back already, but it's not. But it's week to week, and fingers crossed it'll be back soon.
And I asked this for Tom and indeed for John when he was on recently. Obviously, these are not ideal times for going down to DC and get product approvals. There's a lot of other competing agendas afoot out there. There's obviously things that have to be done right now from a global and indeed a pandemic perspective. What's it like from your perspective trying to get a new product, not even approved, reapproved in this environment, Shelley?
Well, it's difficult. I mean, the commission's obviously occupied with the macro markets, and they should be. They're doing the right thing. There's been a lot of moving parts for all the exchanges, especially those 5 exchanges that have trading floors. I commend those exchanges and the commissions, the way they handled the transition from closing the floors, trying to adopt rules that would work in electronic markets to codify things that happen in electronic or in the floor markets, and then revising those rules for flipping back to at least partial trading floor operations. I think everyone's done a tremendous job, given how quickly this transition had to be made. That being said, it's actually helped us in some sense because there are some things we'd like to do in spikes once we have the future back up that we'd need to codify, and SEBO led the way in how to codify those hybrid rules. So it's been interesting. We've done a lot of work with the commission. Hopefully, as I said, we'll have something sooner rather than later, but it's been a challenge.
All right, and also joining us, like we said, from Portillo's parking lot, which is a pretty tasty place to discuss vol. Let me see. I've done this show in the past from Hollywood Studios in the past. That's kind of a fun place to discuss vol. I've done it from, I believe, not too long ago, I think it was a McDonald's or a Wendy's parking lot in Milwaukee. So I've done it from a variety of different places, never from a Portillo's. So, Mr. Meatball, sir, regale us. I don't think they sell meatballs there, but they do some nice hot dogs and stuff. First off, what'd you get at Portillo's? And then B, what's lighting up your tape this week from a vol perspective, sir?
In fact, they do sell meatballs at Portillo's. The meatball hoagie there is one of the better ones in the city. It's just a slightly. I would say that Portillo's, their Italian beef, top notch. The meatball hoagie is great. Maybe just a slight downgrade from like a Fontano's, which is also delicious. What I got to say is how incredibly flat, and for how crazy the market has been this week, how little the VIX has really done over the last couple of days. It's moved up and down to about nowhere. And you got to wonder whether with us moving 2-3% a day, whether this 30 VIX, 35 VIX is kind of settling in to an area of somewhat comfort. I would note that, way out of the money vol seems to be starting to come off a little bit. But the VVIX is certainly bid. I think that when I look at kind of VIX futures and options, I think and I know we're going to talk about this, but the TVIX story is huge, and that the kind of reduction in kind of average daily volume that we're seeing out of VIX options is partially related to that. And I'll be interested to see kind of what the volumes look like in UVXY with, TVIX also coming off as well. So there's been a lot of news and information, but, definitely a lot of action to go nowhere. It's like, something, it's like a tether ball almost, right? You slam it. It spins around the pole and then spins right back. So it's not been getting really, really, really far out of whack, which is interesting and maybe points toward kind of this leg lower being entirely possible, but maybe not with the panic, similar to a March of 2009 type of event where we had a long, slow drop lower. So maybe something like that is setting up.
I like that. Volatility tetherball. There certainly is something to be said for that. You're jumping, you're swinging, you're doing all this effort, and you're right. We end up going nowhere but back around the old pole. You mentioned the elephant in the volatility room. We'll get to that in a little bit. But before we get to that, Mr. Weekly Rundown himself, the one day in the future Dr. VIX. Catch us up, sir. What has been lighting up your volatility tape this week?
Well, Mark kind of nailed it there. That even though it's kind of like VIX settled in, the volatility indexes have settled in a pretty good range and a pretty good predictive range relative to what we've gotten. The fact that VIX and the spikes held in and didn't go back down as the SPY and the S&P 500 started to march higher is a great testament to why people should be paying attention to these things. It definitely gave us an indication that even as the bulls seemed to be winning, that all the concern wasn't out of the market. And I used to work with a hedge fund guy that would always say you wanted to keep your powder dry, and if you're a long only manager, keeping your powder dry and not chasing the rebound that we got. I think that's something that you definitely would have done if you'd been if you pay attention to the volatility indexes. Don't have to trade them, just at minimum, at least pay attention to them.
Well, let's pay attention to the elephant in the room. We kind of touched on it on Monday there because it was such a big deal. We couldn't really avoid it, but we knew this is really the forum to discuss it and sink our teeth into it, into a lot of detail. If somehow you missed it, listeners, if somehow you've been under a rock, one of the biggest products left standing in the VIX ETP space was pretty much announced this week is going to go the way of the dodo on, I believe, July 12th. Of course, they're talking about TVIX, along with a whole bunch of other levered products. Credit Suisse effectively getting out of the levered ETP game. So they're shutting down their 3X long gold ETN, UGLD, their 3X long silver ETN, USLV, their inverse, 3X inverse gold ETN, DGLD, their 3X inverse silver ETN, DSLV, their 3X long nat gas ETP, that's UGAS, their 3X inverse nat gas, that's DGAS. See the naming convention they're going for here, listeners. And then, of course, some of our old friends, ZIFE. We just talked about that on the show a couple of weeks ago, a listener question about that. And, of course, the infamous, the much maligned, including by us, TVIX, which was a product you guys liked, not the least of which because it's one of the last of the levered vol products out there. That was, of course, a 2X VIX product. We talked about not too long ago, back in the crazy time of March, and again, not too long ago, where we saw TVIX teetering on the brink of some pretty just enormous AUM, which could cause its own issues. We've seen TVIX have issues with fund inflows in the past in times when markets were stable. And over these past few months, markets have been anything but stable. So we've seen the AUM explode. Some people thought, including the meatball, that might be the straw that would break the camel's back in the volatility space. And then here we are about a month or so after that, a month and change after that now, from when it really got bad in the AUM perspective out there. And now they decide to delist this thing, which I think took some people by surprise. They thought if they were going to do this, it would have come back when all the madness was happening. I guess they figured let it all settle out. And then finally, this is not worth it. So if you're paying attention in the VIX levered ETP space, or not just levered, inverse, we've had Barclays getting the heck out of Dodge first with XIV, not so much all of their own choosing, but a lot of it. And then now Credit Suisse deciding to just get the heck out of Dodge completely. Maybe go back around the horn again. Shelly, let's start with you. I'm curious. You're obviously in the vol products game. TVIX was an interesting, somewhat controversial beast. A lot of people traded it because it was kind of the only game in town left, but it had a lot of problems, as we talked about many times. What are your thoughts on maybe TVIX, if you have them, and then more importantly, maybe Credit Suisse getting the heck out of the levered ETN space, sir?
Well, let's address the second question first. Levered ETNs, there's been a lot of discussion over the years about whether they should exist. Does the public really understand? You have options on these products, so you're leveraging leverage. I think it's created a lot of problems for a lot of people, and the fact that these things could go negative effectively is really problematic. You look what happened, obviously, with oil a month and a half ago. But these things can't trade negative. If they go far enough against the leverage, are the banks on the hook for unlimited sums of money? And I wouldn't want to put my credit card on that. I'm sure they don't either. As far as the impact on the industry, it's certainly going to take some volume out of the VIX futures, and it's a target audience that won't exist for the Spikes futures when we get them relisted. It's another challenge for the industry. I think it's interesting that SEBO's working with another firm to bring up other ETFs. It's something else to trade, and the leverage certainly makes for an interesting opportunity to capture profits. But it'll be interesting to see how this all plays out.
Yeah, I'm actually not surprised SEBO would work with some of the levered groups to bring these out. So the volatility share guys, I think they were on 6 months ago, maybe, Mark.
We just had Jim Carroll on, and he's part of that Toroso Advisors, which is also part of this new product here.
Oh, okay. Well, there you go. Yeah, they're they're trying to get SVIX out, and then they're trying to get, which it would be basically kind of an XIV clone. They think they're solving some of the TAS issues, and it sounds like they're going to kind of do something similar with a TVIX clone. Although, again, same thing. They're going to try and reduce some of the risks. And yeah, if you look at, and I think Chris Cole said this, another former guest that we've had, that in 2012, TVIX absolutely went off the rails and completely screwed up the market, had a giant dislocation. And then in 2020, we almost had a reverse volpocalypse, a volplosion on TVIX, where because volatility backed off a lot in a certain day, if it had come off not very much more, you could have seen TVIX eat itself down the same way XIV ate itself down as money was coming out of it, as its theoretical AUM kind of had to drop. And I think that was enough for Credit Suisse. And then you add in oil. And to their credit, the one thing I will say that's nice relative to maybe what happened with XIV, at least they're doing it at a time where they're not, going out and damaging and screwing customers, which was not really the case with, ProShares, who I think still is in the middle of going to end up with some litigation issues. And I'll be interested to see what the volatility shares guys have in place in terms of how they want to manage the levered TVIX. In the meantime, TVIX losses, UVXY's gain, I would expect us to see a decent amount of volume uptick in UVXY, as that's now the only levered game in town. And we'll see whether there's a little more trading in the options themselves of UVXY. One note, and I know Shelly probably doesn't want to comment on this, but if you follow SEBO, which is an kind of an equity way of trading VIX, it kind of got hit in the head this week, and the reason being is that with TVIX going away, that is going to affect VIX futures volume, which in turn is going to affect VIX options volume. All those swap contracts go away, which also is going to reduce VIX options volume. And, this is a definite near dated. Who would have thought that you would see less than 300,000 contracts a day in the VIX complex when the VIX is 33? And it took all of these factors kind of coming together for that to happen. Now, that's probably not going to stay that way. There will be people that come in and are able to trade this thing, and there will be a reason to get back in. But I know this sounds kind of crazy intuitively, but I don't know that anybody is rooting harder for the VIX to go back to, maybe 18 or 17 than the SEBO, so that some of these big hedging firms can step in and start using the product. Because, when the VIX is in the 30s, the S&P 500 becomes, in my opinion, the better hedge than the volatility complex. And so there's a lot of ripples that come out from what's going on. Now, on a kind of entirely different note, I want to remind me at the end of the show to give SEBO a pretty nice plug on the way they've thrown their weight behind the Greenwood project, because long term VIX is going to be fine, but it's definitely at a short term low point.
Yeah, a lot to unpack there. You kind of touched on as well. The other wrinkle in this story of Credit Suisse getting the heck out of Dodge and the death of TVIX. We talked before, a lot of you had questions about SVIX, which is the proposed XIV replacement from the volatility shares. Well, those guys deciding, hey, TVIX is gone. Let's dive into that fray as well, maybe with some urging/prompting from the SEBO as well, because they filed now for a new product's going to be their 2X VIX short-term ETP as well. They're going a couple of different routes from it. The ETN was, of course, TVIX. This new one, it's going to be an ETF. That's the first big change. A lot of people had problems with the fact that TVIX was a note that made it difficult to option and everything else like that. Hopefully the fact that this is an ETF will mean it is optionable. But now this startup effectively diving into the fray, trying to replace Barclays with XIV and now trying to replace Credit Suisse with TVIX, which is an interesting space to be in, to say the least. But Mr. Rhodes, I wanted to have you on as well because I know you were lamenting this earlier in the week because you were saying you just finished submitting your draft of your book, which of course broke down the volatility space in a lot of great detail. And now here we go. And the space got entirely thrown out of whack this week. So first off, give us your thoughts, catch us up on, you just did all this work and now the vol space looks completely different a few days later. So give us your thoughts there in the death of TVIX. And then B, what do you think about volatility shares diving in, not just to XIV now, but also potentially for TVIX as well, sir?
Well, first off, I submitted the VIX Traders Handbook late Sunday night to my publisher who's over in London, so he was getting it Monday morning.
By the way, next time you do that, give me a heads up ahead of time so I'll know to put on some size trades because I know something crazy is going to happen the second you submit that.
Something's going to happen.
So
because
it's a great indicator.
Last time, the day after I submitted that first VIX book 10 years ago, they reverse split VXX the next day. So I got to do the exact same thing. So yes, I will let you know in 10 years if I ever write another book, because I think I'm done with that stuff. And Shelley, just so you know, there's a great section on the spikes in that new book. So I'm giving you guys some love there as well.
Thank you.
My funny feeling is, like next week when my publisher comes back to me and says that asks if anything else has changed, that you're gonna have futures on spikes, and I'm just gonna give up. So, but as far as the TVIX thing goes, I actually, and I'm not just putting a spin on this because they're my former employer. If we get the ETF approved in place of the ETN that's going away. One of the things a lot of people don't take into account is when you got an ETN, that does not mean that they have to trade the futures on the underlying. They have to replicate a strategy that owns the futures, but the ETN guys can easily use swaps or some other products to hedge their risk that goes along with the ETN. So that's not automatically, ETNs do not automatically create VIX futures volumes. You know what does? ETFs. And that's why SEBO would be backing the new short one. And it's a good listing venue for the TVIX replacement that might get approved. It might take a little while, but if it gets approved and it gets the same amount of popularity that TVIX did, that's actually in the long run a net positive for the futures volume there. It's also because the structure, I believe, of the new one would actually allow for options. That's going to be good for the whole option complex as well. We don't have that many. Beyond VXX, we don't really have options trading that well on any of the current volatility-linked exchange-traded products. So it actually may help the ecosystem a lot more. And when I say the ecosystem, I mean the whole liquidity pool.
So, yep. Russell, would you think that an ETF would increase vol in VIX futures then? Because
yes.
The ability to trade swaps definitely, think about with TVIX being able to trade swaps, think about how hard the futures moved in March anyway. Now imagine if they have to trade directly in the futures, what that means.
Here's the thing with it, and I've actually read the filing and looked into this very topic. In times of extreme stress, the new ETF would be allowed to go to the swap market. It's not something they would do on a regular basis, but they did put a little clause in there. And I do know that after the Volmageddon back in 2018, some of the other issuers started to look around at possibly some of the, and you can narrow this one down pretty easily, but the ETF ETP issuer actually did look into possibly using swaps if they were unhappy with the liquidity that they were finding in the VIX futures market.
Yeah.
And I did want to touch on something else that you brought up with respect to SEBA would be happier with VIX back down in the teens because you get the buyers. In the past, we've seen the volatility risk premia harvesters step away from that trade when VIX runs up to elevated levels. We saw they actually net stuck with the market back in 2018, and they've actually net stuck with the market through this whole situation. If you go to the COT report, you take a look at the speculative money and where they're leaning. Normally, they go net positive when VIX spikes up. They actually stayed net negative. Now, you can't really figure out exactly how they went about doing that. And you don't know if they were hedging themselves by also buying out-of-the-money calls. And we do see a lot of out-of-the-money call volume in the VIX complex right now. I think Jamal reported on somebody buying 10,000 of the August 70 calls. Yeah. I'll almost guarantee you that is somebody that also has a short futures position on, and they're trying to protect themselves against some future disaster.
Yeah, I mean, that's actually, you're right. That's been the one piece of the VIX complex that is still really traded. I mean, I was lamenting last week, and they're still there, that the 100 calls were worth a quarter, 30 cents. It was in July. Yep. And so the way out of the money stuff is still trading. It's more kind of the at the money, the hedging levels. You don't have the giant hedgers trading that really produce ripple effect of more trading by stepping in, right? For every guy that comes in and buys 100,000 back spreads, his 100,000 back spreads produces another 500,000 in trading. And those guys are all gone. And so that's where getting back in the teens, I think, helps SEBO.
Yeah, it would. I think it helps on the option side leading to the future side. But the futures have the strategies that people use have actually held up better through all of this than they have in the past. But we've still seen the subsequent drop-off in volume, which is pretty consistent with the volatility spike. It usually takes about 4 or 5 months for us to get back to normal volume after a volatility spike.
Yeah, that volume, the VIX futures, we've been talking about it for a while. We talked about it with the Thompson twins last week, who live on that VIX futures curve. That volume in the VIX futures has been, I think, anemic, is charitable of late. And these recent developments certainly are not going to help things. Let's check in on the old VIX futures curve right now. It's remained remarkably stable throughout the first half of the show. It's pretty much right around where it was at the start of the show. So we're seeing that July future, again, getting a little juicy backwardation building into that front portion of the curve. Again, that July future, a little bit north of 0.75 of a point, about 0.8 below that cash. And then we've got the AUG future coming in at about exactly a point below the cash out there. So a nice little blip to the front portion of the VIX futures curve out there. Well, let's keep on rolling this week. We talked a lot about TVIX as well. We could talk a whole show. I'm sure we'll have some questions about it in a little bit as well. Let's get into some of the options overall as well. Spikes, like we said, kind of a holding court, playing treading water there, waiting for those futures to come back online. The big positions pretty much the same as they were last week. We got the July 24s, number one. Number two, the July pars. That just, whenever I say that every week, it just brings a smile to my face. Someone hanging out there for size on the July pars there in spikes, and then rounding it out, or excuse me, these 28s out there for the top positions in spikes land. Switching gears out to VIX options, a decent day, I guess. Almost 250,000 contracts on the tape. I guess compared to recent ADV, that's actually robust paper, because the ADV has been ticking down of late, despite the fact that the pits are back. This recent development certainly ain't going to help things. I mean, the TVIX is still trading right now, but in the near future, when that goes away, certainly not going to help things. The ADV has ticked down since our last show. It was a wee bit north of 400K last show. Now it's about 397, down about 20,000 contracts as of just coming into showtime today, so as of the last week or so. The top positions out there in VIX land, you can see just looking at what it costs to break into the top 10 in VIX options right now, that things are kind of light. We're heading into a usually seasonally quiet period in the volatility space. Of course, this is not a usual season, so all games are off, all bets are off. But volume-wise, it certainly seems like we're playing out a similar tune here. Number 10 is the July 70s, all the way up to 70 for 81,000 of those bad boys. Also 81,000 for number 9 of the July 60s. I can't remember the last time it only cost 81,000 contracts to break into the top 10 in VIX. It's been quite some time. Number 8, 87,000, the July 28 puts. Number 7, 100K even of the July 20 puts. Number 6, $1.05 of the July 35 calls. Number 5, $1.05 as well, $1.05 and change of the AUG 60. So some interesting upside strikes lurking out there. Number 4, $1.14 of the July 28s. Number 3, 119,000 of the July 32 halves. Number 2, $1.43 of the July 30 puts. And number 1 with the bullet, 202,000. That's actually a little bit higher than it has been of late. It's been around $1.50 or so for the number 1 spot. Now, number 1 spot, 202,000 of the July 25 puts. Are at about 60-40 calls to puts out there in the overall top 10. I can keep breaking down the numbers, but before I do that, Mr. Rhodes, I know back in the day you were infamous for a certain segment that required me to play a little music. Think you're up for it yet again, sir?
Oh, absolutely. Let me see if I can find something, though.
All right, you have about 8 seconds while the music plays as we head on into Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
I just like hearing that music yet again. It always brings a smile to my face. This was our long-standing segment, listeners, where Russell would break down what the heck's going on in the weekly side, the very near-dated side of VIX options. Mr. Rhodes, I bought you about 38 seconds. Hopefully that's enough time, sir. What do you have in store for us this week?
You didn't buy me enough time, man.
What fun is that?
And it's funny because back when we had the last big old spike, there was a lot going on in the weeklies. People were kind of timing. They were basically timing that we were not going to have a drop to a certain level. You're still seeing it, but you're seeing it in kind of small size. Like somebody sold 800 plus of the July 10th 14 puts and took in, about 35, 45 cents for those, assuming that we're not going to get down to that level, the first expiration after July 4th or after the holiday. But yeah, there's just not a lot going on in that space. Everybody's kind of sticking with the standards. I have a funny feeling if we remain at the high levels that we're at right now and we get past that holiday weekend, that you might see a little bit more of a pickup in what's going on in that space. It does look like somebody somebody sold a bunch of the July 24th 21 puts and bought a bunch of the 20s and maybe took in very, very like a dime or 15 cents on those, just assuming that VIX was going to remain up above 21, which is a pretty good bet since we haven't been below there. The last time we were below there, I didn't have to wear a mask when I left the house.
That's true. Yeah, and I know some of the brokers have been a little confused when I wanted to put on a July trade, and I said, I want to buy the July, I want to sell the July pars as a part of this trade. I sold the July 100 calls. He's like, my broker was like, there are no 100 calls in the July contract. I'm like, July is the 22nd this month, not the 15th.
So it's a 5-week expiration. Yeah.
Yeah. So there's a lot there. I'm surprised that we're not seeing a lot of paper around kind of the 15th or some of those names because, there's 5 weeks of expiration. And actually, Russell, I kind of like that premium collection. That's an interesting way of kind of doing if you want to sell, an interesting trade would be to sell kind of way out of the money puts in SPY since we're vol so high, and then quote unquote hedge it by selling way out of the money SPX or VIX puts to or spikes puts to take some premium in against that and use that as your kind of a quasi long hedge. You could even do like a little risk reversal-y thing against it or something like that. I didn't. That's really good juice for those puts. I got to be honest.
So you ended up doing that vertical, Mark. We were talking about it last week, and I think it sounded like those pars were too tempting. What'd you get, like 30 cents for them, something like that?
Yeah. I've sold. I did the 50 100 call spread for like $1.70. To me, is a really with a month to go, and us trading around 35 is a really inexpensive hedge. And is really just allows me to do so much. Kind of longer dated selling. I can sell just about anything I want in January or September in the SPY or SPX, and know that I've got a pretty decent hedge on for, the where I think the big COVID outbreak will be, which is kind of right now.
Yeah, it is interesting out there. Let's break down some of the options out there as well. But I like that par. If they're gonna give you 30 cents to go up to that par strike, then I guess you gotta take them up on that offer out there. Really quickly, let's run down what was lighting it up out there in VIX options this week. Like we said, not a heck of a lot, about $250,000 on the tape as of a few minutes ago. Today, the big prints are in the July 45s and the July 37 halves, doing about 21,000, about 20,500 on that so far today. Yesterday, the big contract was the July 25 puts, did about 51,000. Total about 284,000 contracts traded total yesterday. So another quiet day in VIX land. 51,000 of that was on those July 25 puts. And the July 22 puts as well, about 27,000. Wednesday, almost 300K, about 289,000, with 37,600 of the July 25 puts. Again, that was kind of the option and strike du jour out here this week. About 20,000 of the July 50 calls going up on Wednesday as well. So getting a little bit of the upside. Maybe some of that is part of the meatballs trade over there. Tuesday, I should say, down to about 218,000. That's the anemic day of the week here. The big print, 22,000 of the July 45s and 12,000 of the July 35s as well. And Monday, 378,000. So far, it's the volume leader of the week. But if we stay on pace for what we got today, maybe today could break that. 378,000 with the July 70s leading the tape, 47,000 contracts. Speaking of contracts and things, Shelly, you made an interesting point here about what's going on out there in the expirations, not just for VIX and things like that. Obviously, there's a little bit of confusion with VIX weeklies this month, but also out there in SPY and SPX. Why don't you let our listeners know what you noted here, Shelly?
I've never really seen this before. We've got a SPY and SPX expiration every day next week. You got the regular Monday and Wednesday weeklies, Tuesdays quarterly, and then because Friday's an exchange holiday, July 3rd for July 4th, that Friday weeklies move to Thursday. So you got an expiration every day next week.
That's funny, because that's kind of the development that we've been talking about forever. I tease a lot of the exchanges. I'll tease the SEBO about it as well. Like, hey, they keep adding expirations. I keep saying, when are we going to get a daily effectively? We're going to have every day of the week, we're going to have something popping off. And they always back off at that. They always say, oh, no, we don't want to get that far. We want to leave a little bit of room. And yet here we find ourselves, Shelly, every day this week with an expiration.
If you include today, it's 5 days in a row that we have expirations.
The notion of expiration Friday has become so quaint now, hasn't it?
It has. Remember when they used to be Saturdays?
Yeah, well, that's a whole other level out there, Mr. Shelley. Well, that's a good point. So all of you who've been hitting us up saying when we're going to get daily options, you kind of, or at least daily expirations, you effectively have that this week, listeners. So have at it and enjoy. Speaking of enjoying, maybe some of you aren't enjoying so much the product you guys usually enjoy fading, but we know when the front portion of that VIX futures curve gets a little juicy, the fade play doesn't go as well out there in VXX. That's pretty much what we're seeing right now. Start of the show was actually exactly unched from last week. It was at 36.75. Now come into the latter portion of the show. It's up about 0.75 of a point, right around 37.5. That kind of reflects what we're seeing out there in the VIX futures and in the vol space in general. A little bit of that juice is translating into no more erosion, at least for today out here in VXX land. Decent paper on the tape coming into the start of the show. There was about 133,000 contracts on the tape in VXX land. The ADV now is about 233. That's jumped up to about 177,000. So it seems like it'll probably surpass that ADV. The big prints as of a few minutes ago out there in VXX land were the July 40s, 11,000 and change out there, and July 35 puts with about 7,500 out there. Mr. Meatball, I know you're crazy in your pit chat, a.k.a. the Legion, a.k.a. the Vol Trading Club, a.k.a. FMAGA. They like themselves a little bit of VXX. Anything lighting up their tapes this week, sir?
Yeah, I was, again, looking at the July 2nd, my birthday, 37.5 straddle, about $5 when you look at how much double X has been moving. The double X, by the way, that's trader speak for VXX. How much double X has been moving this week. As expensive as option premiums are, the vol of vol has been high enough where you're able to pay for owning VIX and VXX premium relatively inexpensively. And if you're willing to trade in and out of the different strikes, you can do pretty well. So that's been the trade. What I like to say is the trade du jour of the day. Yes,
the trade du jour of the day. So there's a little restaurant down near me just opened up called Francois Frankie, and it always cracks me up. It's like Frank. So trade du jour of the day. In a similar vein out there, let's look really quickly, hit up some of the top positions out. Usually I do a top 5 in VXX, but you got to go all the way out to number 9 to find the first and only call in the top 10 out here in VXX land today. It's the Jan 25. There's 16,000 of those. Everything else in the top 10 right now in VXX listeners is puts, topped out again by that put spread that's still on out there. Number 2, 96,000, almost 97,000 of the AUG 30 puts, and number 1, $1.05 of the AUG 22 puts. That's the guy, of course, who rolled, I believe, in the July 35 puts not too long ago, now put on this size put spread, and yet again another week where it stubbornly refuses to go his way. But he's done all right in his rolling, so maybe if he had waited a little bit on those July 35 puts, done a little bit better, but hindsight, always 2020. We'll see how this put spread fares. If the vol, at least in the near term, is what it's showing, maybe not so much here this week. But yeah, all puts pretty much all the time out there in VXX land. Maybe for those diehard contrarians out there, that seems like a little bit of maybe a contrarian indicator. I don't know. On the vol space, I really quickly, the individual name vol space. We still have some earnings popping off this week. You guys can find the breakdowns over there, theoptionsinsider.com. Check out those reports from our friends over there at RHOADS. They're free. If you like trading vol this time of year, something good to check out. Still got some decent names popping off there, including Nike. Nike, they reported yesterday 100.08. Even that's where their stock was. They were pricing in $4.31. In the past, they've moved for $72 out there. So kind of keeping that theme alive of light vol on the straddle front this earnings season. And then Micron coming up on the 29th. They were at $48.29 at the time of this report. They were pricing in $2.90. And they, in the past, have moved $3.20. So yet again, another fairly well-known name pricing in light vol, despite the fact that it's kind of an unprecedented earnings front. Speaking of unprecedented, let's see if we can squeeze in a few of your unprecedented questions. It is time to check our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's see how many of you we can squeeze on really quickly. Looking at the live chat. Live chat always gets bumped up first. We got our old friend, Mr. Mark Brandt, in there. Said he left Tasty Trade Live to come join us today. Well, a good choice there. We like those guys, but this is Vol Views is kind of its own beast. There's nothing else really like it out there. So if you like your Vol fix, you got to tune in with us. If you want it directly in your ear holes, you got to tune in live on Fridays. Otherwise, we like you coming after the fact as well. We know a lot of you do that as well, but you got to get it live in your ear holes if you want it, that immediate fix. He also says he sold a ton of 303, 304 call spreads expiring today in SPY. He said the action around those strikes is heavy. Well, yeah, it doesn't surprise me. We're seeing some interesting stuff out there today, I think, to put it mildly out there. So hot and heavy. I'll have to dive into those strikes here after the show and see how we're doing out here. Really quickly, this one from Mel, Mr. Meatball. We just had the Thompson twins on the show last week. This Mel wants to know, what's the ticker again for, I like what he calls it, the Mullet and Tulum Volatility Fund. So, Mr. Meatball, hit up Mr. Mel and everybody else out there who wants that ticker again, please, sir.
It is MSVX, Mike, Sierra, Victor, X-ray, MSVX.
There you go, MSVX, Mike Sierra Victor X-ray for Mel and everybody else out there. So if you like playing in the VIX futures term structure, and there's some playing to be done right now, short the front, buy the back, buy the front, sell the back, whichever way you want to go, mullet to loom somewhere they're in, kicking the can down the curve, whatever they call their various strategies out there. Check it out, MSVX is the ticker for you. I'll be nice. We're kind of running up against it, but let's squeeze in one more really quick one here. This comes from Dustin. Dustin says, I have a question about implied volatility. Well, you came to the right place. He says, the Investopedia description of implied volatility is strange. He puts in quotes here, as expectations rise, or as a demand for an option increases, implied volatility will rise. In a nutshell, does that mean that when people buy these options, it will boost the price and overall vol levels? Short answer, yes there, Dustin. He goes on to write, I assume this is why the prices jump right before earnings. Also, yes. Seems strange because demand for an option should have nothing to do with the volatility of the underlying stock. Well, there's a lot to unpack and perhaps correct here. Mr. Rhodes, why don't you give Mr. Dustin here a quick rundown on what he terms the strange viewpoint on volatility from Investopedia, sir?
The word to keep in mind there is implied. The option price is implying what we expect volatility-wise out of the future, not what's going on right now in the stock. And that's why he correctly observes that the implied volatility goes the price action implied by the price of an option increases when we have a known unknown like earnings on the horizon. And then, so the volatility of what's going on in the stock right now really doesn't have that much of an impact on the option volatility expectations, especially leading up to earnings. It's all about what the option pricing is expecting in the future, not what's going on right now. I hope that helps.
Well said there, Dustin. Hopefully you came to the right place. Don't just go to those static online places. Come to us on the show here. We'll set you straight, or at least walk you off the ledge. I like Mark Brandt chiming in on the chat. He says 50 doesn't have to wear a mask on his island. I presume he's talking about our old friend 50 Cent. And yeah, he did all right with that trade. Maybe he does. Maybe he is sitting on his own private island. Again, we don't know the other side of his portfolio. He was probably hedging. So maybe that one took a pretty big hit, but still, I'm okay with the mental image of 50 Cent hanging out on his private island, sans mask.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, it's that time of the show. I know you've all been waiting for it. The time where we peer into the future and to see what the vol gods hold in store for us. We had quite a broad market last week, which made it kind of fun. We had Mr. Meatball on the downside at 33.33. We had Tom Jark, the vol product specialist over there in the MIAX hot seat, at 34.22. Not looking bad there on that one as of the end of showtime here. Then we had the Thompson twins. We had Matt at 36.38. We had Mike at 39. And then we had myself up there. It looks playing actually the upside game again, which I have been doing a little bit of late out there, at 40.5. Like I said, I thought we would flirt with it more intra-week than we did, but we're getting the development at the end of the week as opposed to the beginning of the week where I thought it would be. So come see me in a few days. Maybe we'll be testing that level again. Coming into the latter portion of the show, we're seeing spikes here at about a 35.5, so drifting up throughout the course of the show. VIX at about a similar level out there. So that actually puts Matt. Matt is the winner there. He's within a point there. He's looks like about 0.68 away on spikes and indeed on that. So we'll give that a listener victory out there, which means, you know what? Since we're charitable, Mr. Rhodes, that means you get to go first, or you get to pick if you want someone else to go first. What do you want to do, sir? Do you want to go first, or do you want to have someone else go first?
I want to go first. I love coattailing on Matt with Matt and Mike Thompson. And I like that my favorite of the Thompsons actually wins. And Just kidding.
He's really everybody's favorite. You're dead.
I know. I like them equally. Every time, whenever we hit Pages in Hinsdale for breakfast, which is a periodic get together, I enjoy their company equally.
I love Pages. There's another great restaurant. Pages in Hinsdale. You cannot go wrong, folks.
You cannot.
Really, really good corned beef hash.
I want to see the meatball there before you head to Texas.
Absolutely.
So I'm going to stick with basically unchanged week over week. I think that's kind of the way to go. So how about 35.5 on the spikes and 36 on VIX?
All right, 35.5 on spikes and then a 36 on VIX. And then Mr. Meatball, you were the next closest, so you get to go next, sir.
All right, so I've just established that I am long the VIX 50-100 call spread. Yes, you did. Right? Size up. So now here's the point on when we talk about 50 Cent and his island. I am going to, my book is going to be my outlook. My position is my outlook. So I'm going to go 32-32. So wrap that around your heads, listeners. I want the VIX to drop, and I just told you I'm long the 50-100 call spread. So that is how paper really trades when you think about it, folks. That's why my outlook is my position. My outlook is my position, and I'm going 32-32.
Well, you did kind of clue people in that it was a hedge there, too. So you gave a little bit of insight. But you're right. Always people out there thinking 50 is just swinging for the fences to the upside. It's a nice thought, but it's not really reflective of what's happening out there. All right, speaking of what's happening, let's see. We got 35.5, and then a spikes and a 36 for VIX on Mr. Rhodes. We got a 32-32 for the meatball. So a lot of folks fading what we're seeing out here of late. I've been doggedly determined keeping some of that upside juice up there yet again. So I'm not gonna go quite as substantial as I was this time last. I just see there's so many shoes dropping on a daily basis out there. Maybe it's the rational part of my brain that just can't let that go. I'm not sure why that is, but let's just go for a nice 37 double, 37.55 to the upside. So that's me, 37 double to the upside. Mr. Rhodes at about a 36 to 35.5, and then Mr. Meatball at a 32. All right. Unfortunately, that music means we've come to the end of another epic journey through the world of volatility. Oh, what a journey it was. The vol space looking a lot different at the end of the week than it did at the start of the week. Big products going the way of the dodo. I'm sure you guys have thoughts about that. Hit us up. What do you guys think? What does this mean for the vol complex going forward, for products like VIX and Spikes or Vol of Vol? Are you excited about these new products? Do you think they have a chance of getting approved? The fact that they're an ETF versus an ETN means they're probably be optionable. Does that get you excited? All sorts of things to unpack here, and we're going to see this play out over the coming weeks and months. As Shelly mentioned, it's a hard time to get things approved right now, so I don't think we're going to see these listed anytime soon. But it's nice to have the theoretical discussion out there yet again. So I mentioned Shelly. Let's go back around the horn to him. Mr. Shelly, if folks are intrigued, they got questions about Spikes or about the Spikes futures or what you guys have cooking over there at MIAX, where should they go? What should they do, sir?
You can see everything you ever wanted to know about Spikes at MIAXoptions.com/Spikes, or just click on the link.
There you go, MIAXoptions.com/Spikes. They got a cool little video up there, nice cool little video explaining all things Spikes. They got some market data, if you're into such things, press releases, links to a cool show called Volatility Views, and a lot more. Check it out, MIAXoptions.com/Spikes. And Mr. Rhodes, sir, where can folks come check out your latest handiwork in the world of options? And also, when can they expect this VIX books to be rewritten and published, sir?
There's no more rewriting, man. I'm done with that. September, October is what I'm thinking will be with the book. We kept pushing it out because we wanted to write a little bit about what happened this year in the marketplace as well. But I finally had to put a deadline on all of that. And then I'm at EQ Derivatives now. I'm enjoying my new spot. doing a little bit more digging into how to putting strategies out there every once in a while, working on a really cool risk harvesting strategy with SPY options during the program today, and I think it came up with something cool. So eqderivatives.com is where I can be found, or just on Twitter is probably the easiest place to find me.
On Twitter, at Mr. Russell Rhoads. Remember, he spells it funky out there. Not the road, your typical driving road, not the roads, the island. RHOADS. Check him out over there on the Twitter machines. Probably the easiest place to go. And last, but certainly not least, even though he will argue sometimes that he is the least, he is the greasiest of meatballs. I think he has finished off his Portillos now. Mr. Meatball, if folks they want to check out the Trading Legion, the Pit Chat, the Vol Trading Club, get the newsletter, all that good stuff, where should they go? What should they do?
Yes, I'm now coming to you back from beautiful Riverside, Illinois, overlooking the Des Plaines River. Go to, I put out a daily newsletter. Go to optionpit.com, sign up for our newsletter. And Russell, now that you're at EQ, maybe you can finally do that earnings study that we've been, the earnings straddle study that we can get that all updated and out and ready for people to finally get an understanding that earnings, even though the vol goes up, doesn't necessarily mean there's a huge edge to it. So I appreciate all the work that you're doing and that we're doing on Spikes and our listeners. And go to optionpit.com and you get that amazing Mark Sebastian content every day if you sign up for our newsletters.
There you go. Amazing Mark Sebastian content every day. What better pull is there than that? And if you like the Rock Lobster, he's hanging out over there too. Optionpit.com is the place to go. And on behalf of the Greasy Meatball and Mr. Rhoads and Mr. Brown, the folks over there at MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in those questions, for leaving the reviews on your platforms of choice. Keep them coming. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.